Morning, Steve Walker, Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Monday the 8th of December. UK power markets have opened around 50 pence a megawatt hour lower this morning, with key drivers including Norwegian production issues over the weekend being handled adequately, indicating sufficient supply flexibility in the UK. Broadly warmer temperature forecasts above seasonal normal and through the period. That's on top of last week's forecasts above normal, and good renewable feed-in on the power side on top of that reduction in demand. If you'd like any more information, please continue to watch or contact us on the email address provided. Temperature forecasts over the weekend were marginally warmer across the period by 1 degree centigrade. Medium range models should provide an early indication into 2015 later on this week, although expectations for the new year through much of Q4 have been on the cooler side. Jan 15 UK baseload has opened well below the 47.20 mark that it closed at on Friday, with the corresponding gas contract over half a penny lower, trading around 54.8 pence per therm. The within day system has opened 9 MCM long. Spot prices remained muted over the weekend despite a pickup in demand, numerous Norwegian production problems. LNG send-out has nudged lower though, helping tighten things a little bit. Number of tankers headed towards Asia that had originally been fancied to berth in Europe or at least the UK. Depressed Brent prices should start feeding into LNG contract pricing more significantly, as the decline there has accelerated in recent months. That's in addition to seasonally weaker LNG prices over in Asia. Imports through BBL have increased to 27 MCM as European demand subsides after a much cooler than normal period last week. Our UK, however, still remains kind of broadly flat in either direction. Power side, wind feed-in is above 5 gigawatts today, and that's set to increase through the week to above 7 gigawatts. Power station demand is accordingly down to 31 MCM today, well above 40 MCM last week. You'd expect that to potentially dip even further. Both interconnectors are flowing to the UK at them just below their maximum capacity. A couple of wobbles with the French interconnector last week that appear to have been resolved at the start of this week. Elsewhere, Brent for January settlement declined almost $1.50 to 63.73 a barrel. Data on Friday, explorers in the US increased the number of operating rigs last week. That's defying predictions of a drilling slowdown. Read that some of the more marginal shale plays require a break-even level of around $80 a barrel, so that'll be an interesting indicator to watch in the coming months.